It is Employment Saturday, or the day after Employment Friday, or
Friday.
however
Yeah.
you want to call it. Larry Goldberg is my regular co-host, where we take a look at what Cathie Wood had to say about Employment Friday in her report, which actually came out this morning as well on Employment Saturday. Larry, I was mentioning to you earlier that the funny part about her report this month is she never ever mentions the employment numbers.
Yeah. And the employment numbers were kind of for the first time had, you know, they keep on adjusting downwards week after, I mean, month after month after month. We've had these downward revisions, which is one of the reasons that I've been so negative on the economy. For the first time, apparently there were upward
There's
revisions.
upward revisions. Now, of
Yeah.
course, since you only had 12,000 jobs added last month, to have an upward revision of a couple 22 or 23,000, I think the number was something like that from last month, isn't a huge amount, but it is at least an upward revision. So
It's not nothing,
it's
not
not
nothing at
nothing.
all. Yeah.
Larry, and let's go ahead and finish talking about the employment numbers, because I don't think we could easily forget to later, because they're
Yeah.
not in the slides that Cathie did. So I think the things that I try to look at, I think you do as well. One of those is the work week. The work week was flat, but there was a little more overtime, but barely. I mean, it was like a 0.1
Yeah.
hour, per week. But that's not, again,
Probably within that error rate.
yeah, but at least it's a positive. It's not a negative. They did also revise upward 2 months ago, so it wasn't just for last month that they revised upward. The headline number itself was in the normal, within the range of what was expected. So the market reacted to it at, the headline number in that way, as expected. And so I think in general, one could say that the employment picture looks okay. Oh, I know the other one is the one that does bother me, and is that it's the rate of increase in the wages, which is still going up at 4% per year, and actually was 0.4% month over month, which would be a 5.5% run
Almost
rate.
5%. Yeah.
Right. So that concerns me, and you and I've talked about this before, because the the industry, what do you want to call it? The overall economy is close to 80%. Well, let's put it easily over 60% services, and that's where we're continuing to see the inflation is in the services, and this
Yeah,
labor.
but simply an increase in wages does not necessarily translate to directly to inflation. It depends on productivity.
Of course.
So if productivity has advanced by at least 0.4%, then or 4%, then we definitely are not, it's not inflationary.
Right. And in fact, if it's half, then we could be looking at 2% inflation, which would be great.
Exactly.
And in
Exactly.
fact, the productivity numbers recently have been in that range. So that would be a hopeful sign. Okay, Larry, that was the employment figures. Again, she didn't talk about those, but what she did do was she started off, as I think almost everybody in the country, except a few diehard progressives, she started off with a great deal of optimism. And man, everywhere I turn,
Yes.
everything I'm seeing right now, there's such optimism. I listened to the All In podcast yesterday. I listened
Yes.
to the Cathie Wood. Listening to all these guys. Everybody is so positive about what's going to be taking place here in the next few months and next year. And most of it does, when it comes down to it, kind of comes down to that word, my favorite word, productivity, and the one you
Yeah.
just mentioned. So many opportunities for productivity. And Cathie gave some examples out of the SpaceX world and out of energy world. Maybe you'd like to take us through some of those.
Yeah, so I think that the example she gave us really talked about, you know, the Elon Musk companies, SpaceX, and so I think it's worth looking at what she talked about But the lesson to be derived is the opportunity for dramatic improvement in cost, and reduction in inflation by, efficiencies such as productivity, and more importantly, the reduction in regulation.
Yes, that was the part I was waiting for you to get to, Larry, because that was the part I left out. So I needed you to fill
You
that part.
set me up. You set me up, and you thought I was going to disappoint you, right?
Yeah, well, see, I'm the one whose hobby horse is productivity, and you're the one whose hobby horse is deregulation. So we're a good team.
Yeah, yeah. So, let me just show you the slide. I mean, if it's, 𝐒𝐚𝐿, then it's all about Wright's law. And what does Wright's law say? For every cumulative doubling of a particular innovation or particular delivered product, manufactured product, there is a reduction in cost of that delivery. So if you manufacture a good, every time you double the amount of goods you actually ship, you reduce the cost of that good by that amount. And that's a cumulative doubling, which means that, if the good's been manufactured for 100 years, as the auto has been, then the cumulative doubling takes a heck of a long time, because we've delivered hundreds of hundreds of billions. Is it billions?
Billions and
Yes.
billions, I'd say. Yes.
Yeah. And so, it's not easy to double. And, here on this slide, we're talking about an interesting metric, and that is the SpaceX cost of delivering an upmass to orbit. And here we're looking at the cumulative upmass to orbit over time. And so you can see here in kilograms that when we had delivered 100 kilograms upmass to orbit, it cost, and there's a little bit of a misprint here, but $50,000 to send 1 gallon of water to orbit.
Yeah.
1 gallon of water weighs approximately 10 pounds, I guess. And so it costs $50,000 to send 10 pounds to orbit. But over time, as the amount we send to orbit doubles and doubles and doubles and doubles again, then this cost to go to orbit drops. And it's always, Wright's law shows that there's a very high level of consistency with each of these doublings. And here we are, we've delivered 100 million kilograms to orbit, largely thanks to Falcon 9.
Right.
Delivering these gigantic amounts of, mass to orbit again and again and again. And so the cost has come down to where it's now, we're really close to Starship being launched. And once Starship is launched, this number is going to rise very dramatically. But they're forecasting, based upon the numbers SpaceX has given us, about $750 to send a gallon of water to orbit. So we've seen the cost decline run from, $50,000 a gallon to $750 a gallon, 1.5% of the original cost.
Right. Right.
Just quite remarkable, actually, when you think about it.
Well, and again, to your point earlier, when you had NASA doing this over the years, they were heavily regulated. The companies that were building these things were on cost plus contracts, and there was no real incentive to get the cost down. And so you had flatlined on this number for years and years and years. And then all of a sudden, you've got this, in just a few years.
Plus, the regulations and the efficiency with which it was done was so low that the amount of mass that was going to orbit was not doubling very rapidly at all. It was going up very, very slowly.
Right.
And even, in fact, the Russians were doubling faster than we were doubling by quite a bit. But with the advent of Falcon 9, everything flipped. Suddenly, the United States was sending by far the largest mass
Right.
to orbit, not even close.
Right. Right.
And so, we are getting all the benefit of that. So yeah, yeah. So that's what Wright's law does, and that's what deregulation does. So you get a company that doesn't run by regulation, company that runs in private, under private management, a company that runs on first principles, a company that focuses on delivering, large amount of mass to orbit on a mass production line. Then you get this rapid reduction in cost. And when Starship takes off, then it's just going to plummet downwards. I suspect it's going to be faster than we're seeing it right now. Okay.
Yep. Yep. So then,
And then what Cathie and the team at ARC shows is that there's a similar kind of bandwidth cost decline coming because of Starlink delivering satellites to orbit that have, the ability to bring much higher speed, much larger bandwidth of communication to the Earth. So you get this very, very high bandwidth internet direct connection, or at least right now a connection through a land-based facility, but in future it will be directly to the phone over time. And we see this very dramatic drop in the cumulative gigabytes per second. As the cumulative gigabytes per second from orbit comes down to Earth, we see the reduction in cost, dropping quite fast. Starlink with Falcon 9 being responsible for, from 1,000 to almost 100,000. So that's when things really picked up. And we saw a reduction in the cost drop. And then we forecast with Starship, that drop is going to be even greater. So we see the drop going from, $1 billion to send a gigabyte to Earth. A gigabyte is about a gigabyte per second to Earth. A gigabyte per second will support about 200 people.
Mhm.
So, go from $1 billion, and we reached like something like $1 million when we accumulated to 1,000, and then Starlink came along, and we're down to like under 100,000, maybe 70,000, and we're on our way down to 100. $100 per gigabyte per second. And so once we get to that level, it's internet for everybody.
Yes. Which is virtually true anyway. She points out, of course, that last week we just had SpaceX announced that, come one, come all you, AT, Verizon and everybody else, if you've got a cell phone business, we're happy to partner with you. And basically, she thinks that those will just be packaged in. Everybody will just have this ability everywhere on the planet to be able to get text, regardless of how remote you are.
Yeah, but I've got a little bit of news for you.
Oh, okay.
This is not generally announced, but I think that it's going to reach a point where we will be able to directly connect internet to the cell phone without an intervening ground station, and that will just explode.
Oh, yeah.
We're going to be going from a constellation of about 7,000, which is where they're at right now. Well, they're probably a little bit closer to 6,000 because they've lost quite a few, but I think it's going to get to 25,000 within a couple of years. And at that point, and they're going to be the orbits are going to be lower as well. So the speed, speed is going to be higher, and you'll also be able to do a lot more direct-to-cell
Wow.
bandwidth. So everything's changing very rapidly, and we're going to see this drop to, $10 a
Right,
gigabyte.
right.
And so the other thing she talked about was the cost decline of nuclear power before regulation and what's happened to the cost of nuclear power after regulation. Regulation was imposed because, the ecologists got very scared of what was happening with nuclear power. And
Into
so,
the rate in particular, yeah.
yeah, and while we were seeing these Wright's law cost declines very nicely, with the cost of energy, it came to a screeching halt, with the Japan nuclear reactor and then the U.S. Energy Reorganization Act, and so the cost has climbed dramatically, bringing to a screeching halt the cost declines of Wright's law, and that it's a very sobering fact because if you look at the price of energy over time, you'll see where, back in 1893, energy cost something like $10 per megawatt, per kilowatt hour, sorry. And that's a lot of money. It would
Yes.
cost you thousands of dollars a month, thousands of dollars a month to heat your house.
Yes.
Well, I mean, that cost has dropped so dramatically with, a little bit of interruption for the war years, but it dropped, and then with nuclear power dropped even faster until the 70s. And now, since the 70s, it's been kind of flat, if not, increasing in some years. And why? Because two factors, both environmentally related. One is nuclear power being, halted, and the other is oil,
Oil and natural gas, yeah.
oil and natural gas. So we can resume this reduction and even get a faster reduction if we, go forward with nuclear power and we unshackle oil. And it would be good for the economy and ultimately for the ecology if we move forward and improve the productivity of our economies.
Yeah, and I did a video the other day where I was talking about my projections for the next couple of years. And one of the things that I think we're going to see is a precipitous drop in the cost of oil. You and I have talked about it too on Friday night.
Yes.
And so we're going to see a drop in the cost of oil. We're going to see continued drop. We're going to see nuclear. We're going to see nuclear starting up again. We're going to see a natural gas turn loose as well. So we could see a pretty good decrease in the cost of energy even in the next 2-3 years, and that is going to ripple through the economy. That is going to.
Texas is the showcase for this.
Yep.
Texas, they are very, very, very good at delivering solar and wind.
Yep.
And their regulations, their regulatory environment is very favorable. And so it's the poster child for what could be done. And are we going to see nuclear? I do believe we will see fusion power by 2030. I spoke to some fusion startups over this last weekend at a conference I was at, and it's quite clear that this is going to happen by the 2030s. And so the cost of energy is going to drop very dramatically. So that's a pretty exciting moment for us. So yeah, I mean, it's a matter of relaxing the regulatory restraints, not taking regulation away at all, but making regulation smart, making it cooperate in a reasonable way, and reducing all these layers of bureaucracy and these multiple agencies that all get involved in the process. So, that's the job of DOGE, and Cathie spoke at great length about DOGE, and she's very high on what they're going to do. I think it's going to be a battle. I don't think the battle is going to be won by July the 4th,
Fourth, July 4th.
26th.
Uh-huh.
I don't think it's going to be won by then. But I've doubted Elon before, and I've had to eat my words.
He and Vivek had all these meetings, in
Yeah.
DC over the last couple of days, and I saw one of the senators who was in those meetings, and he said it's unbelievable what they've already got. He said he was just mind spinning after the meetings because of the amount of material that they've already been able to pull together, pinpoint, talk about how they can get around, or whatever it is that they need to do to get these done. They haven't even got to the inauguration day yet, and this is already in place.
I've watched new administrations ever since Kennedy.
Yeah.
Not from afar, but really studied them, every one of these and I've never seen a new administration come in with this level of preparation, not even close.
Not even close. Yeah. Yeah.
And the amazing thing is they're not going through the standard process of being briefed by their predecessors. They're keeping their predecessors at arm's length, but they're doing the work. And so I'm very excited about what may happen.
Indeed.
Because at the end of the day, we've got to solve this deficit problem. And
Right.
the deficit problem is extreme.
Right.
I've actually got a show coming out. I've got a YouTube coming out that I've done with Brad on the issue of the deficit and what DOGE is going to have to do. But there's already, Bloomberg today carried an article about how skeptical they were, that there's only this small percentage of the budget that they're able to pass but they're completely wrong.
Oh, okay.
And so I've got a lot of information on how they can solve a lot of misspent money in healthcare, which is one of those areas that, people treat as untouchable, but it is highly touchable. And welfare, all of these programs that they say are untouchable, they're eminently touchable.
Good. I'm glad that's a conclusion that you've reached, Larry. I'm so excited.
Right. And so I think that we're going to see some very big changes indeed. Now, the one piece that will require, look, some of these pieces may require legislation, but I'm talking about those pieces that are not going to require legislation. But if you get to the actual structure of Medicare, and if you get to the actual structure of Social Security, that probably is not going to happen by 2026. Although, we should never say never. Anyway.
I'm actually on my X, not on the channel, but on X, I've been running a series of questions and talking about the whole Social Security thing because, the vast majority of the people in the United States don't realize that in 2032, Social Security, my check, your check, Larry, they're going to get cut if we don't do something between now and then. It's not.
Yeah, well, I mean.
Not maybe, it will be cut.
Yeah, so that's true. That's true, but they can always take from the general fund. They don't have to take it from the so-called trust fund. That's an accounting entry.
No, Larry, I think this is a law that they put in place, I think maybe to encourage the change, all right? Because this is not like, oh, yes, we can go to the general fund. No, if they don't hit certain things by 2032, the cut is automatic. Now, you can change the law between now and 2032, and you could change it to say we'll take money from the general fund. My point is I think this is the opportune moment. This is that moment in this 2 years where if they came up with something that cut a little here, added a little there, maybe completely restructured it in the Bush way, Bush 2, to be something where it's an investment process and some kind of a sovereign wealth fund. Something.
Yeah. Poor old George Bush tried to do it, and he got, his head handed to him on a plate. Yeah, it was one of his he thought he had a mandate. He didn't have a mandate.
Right.
Trump definitely has a mandate, and he's got only 4 years, so be interesting to see what he comes up with. Anyway, here we are looking at the problem in the face. This is the federal deficit, and it's at 6.89% of nominal GDP. It got down to minus 17.5 in the pandemic, but it's really not looking good. The
Right.
question is how do you bridge the gap? And so the goals of DOGE are 3% deficit. That's to halve the deficit.
Actually, this is the Treasury Secretary, right? The Treasury Secretary designate. I think these are his goals, not DOGE's. I could be wrong.
You're right. You're right.
Right.
Sorry, I misspoke. 3% deficit, 3% real GDP growth within 3 years, over 3 years, and 3 million barrels a day of additional oil.
Right.
And so, we're going to see the end of Gary Gensler. We're going to see the end, hopefully, of Lina Khan. She hasn't resigned yet. And that's important. Cathie points out that with Lina Khan being, in the Federal Trade Commission, acquisitions have come to a dead end. And that's very important because acquisitions by the majors or even by private equity, acquisitions are how we actually exit our ventures.
Mm-hmm.
And ventures are what's feeding the beast. Ventures are what is feeding the productivity. And so here's an example of regulation gone crazy, because regulation has stopped the whole process, this very, very important process of companies being born. And how are they born? They're being born with venture money, with seed money and venture money. And why is seed money and venture money coming into them? Because they know there can be an exit. So I would highly recommend that people watch the BG2 pod. A lot of us watch the All In pod, and it's excellent. And I've been to 2 of their conferences, so I'm a fan. But I'm a bigger fan today of BG2.
Wow.
So I would highly recommend you watch BG2. Brad Gerstner, he's an amazing guy, just an amazing guy. And so I would I'd say that, and they explain in a recent pod, I think it was not the last one, but an earlier one, but they reiterated each time that without this escape valve of being able to sell into the larger companies, it's very hard to start a new company. And so these companies are continuing to operate under VC money. VCs aren't getting their cash out. Limited partners aren't getting their cash out. And the question is, how do you maintain, the flywheel
Right.
of the startup economy? And the startups have been driving the economy in so many ways.
And simultaneously, Elon had pointed out a couple of years ago. Elon pointed out that running a public corporation today is just horrible, just horrific.
Yeah, but that's another regulatory bind. So
exactly. So you got both of those things, though,
Yep,
putting a cap on this ability to run these startups through the VC world into something that eventually allows for an exit.
Yeah. Yeah. And so, Gary Gensler going, I think, is very important. I think that will make life much easier for Gensler is not the reason that people are not going public. So I don't want to draw a connection between the two. But Gensler has been, the guy who's closed down the Bitcoin or cryptocurrency market. I'm not a crazy crypto fan, to be honest. I'm not. I'm very respectful of Bitcoin, but all those other coins and that I'm not that crazy about. But building a network building a network layer on top of Bitcoin, I think, is a very good thing, and that's the piece that's been killed. So,
Yeah.
I'd love to see Gary Gensler go, and he's going to resign. I wish 𝐒𝐚𝐿Eena would announce her
Right.
resignation.
Right.
And then the Department of Justice, pro-competition, anti-monopoly, this is killing M&A. And then, DOGE and Elon, forcing a return back to the office from these people who are working
Yeah.
5 days a week from home.
Yeah.
It's a terrible business. I mean, talk about, but just to get on my hobby horse for the moment, I will tell you the problem is not the 3 million. The problem is not only the 3 million people employed by the federal government.
Right.
It's the 20 plus to 30 million people employed in local government.
Yes. Yes.
And to a large extent, it's the people employed in education.
Right. And then there's another layer you're leaving out, which is I don't know how many millions that are the contract laborers for the federal government.
Yep.
That's
Yep.
another big, huge thing because, yeah, the total number of people employed by the federal government hasn't gone up that much, but the number of contractors has gone up dramatically.
Yeah, that's a very good observation, and we do need to investigate that. So, there's all this opportunity. There's AI coming, and, we have David Sachs now as the czar. I
Yes.
think that's a good thing. It's a really good thing. He understands the space incredibly well.
Right.
I mean, the guy is truly brilliant. We've got Jared Isaacman at NASA,
Yeah.
and that could be amazing for us because we saw the cost of tonnage to orbit, and leveraging that. It's incredible what they probably can do at NASA. So, and then the big issue is healthcare.
Right.
And here I have high hopes.
Okay.
And, in my new channel, The Maverick Mind, which I'll be announcing shortly,
Hey.
I'm interviewing somebody who really has great insight into the opportunities of what we can do in the healthcare world, real insight into what can be done. Because I think there's some gigantic leverage in terms of taking huge costs out of, the healthcare world and improving services.
At the same time, yeah.
Yeah, yeah. So I'm very, very excited about that. And then there's drug discovery, moving away from chronic disease treatment and going to cure treatment.
Right.
So because that's how they've this is how they suck at the teat of public.
Well, and Cathie's very involved, of course, in that whole medical side of it. And I think the way she put it was instead of treating chronic disease, you prevent and you go for cure.
Cure, yeah, absolutely. Absolutely. I mean, treating the chronic disease is is what these pharmaceutical companies, that's their golden goose. And,
Right.
about time we take the goose away. So if you look at CBO's real GDP annual estimate, this is what it is. Not very exciting. It's very disappointing, in fact. Their estimate is 2%. We have to lift that.
Right.
2% is not going to do it.
Right.
Our budget deficit is just going to go up and up and up. We got to go up at least 50% to a real 3%, and we've got to reduce our expenditures. So we've got to do both. One is not enough.
And if two of my heroes, Cathie and Tony, are right, we're going to make it easy.
Yes. See, I don't consider it easy. I consider it a great challenge, but I think
Doable.
those two people, I think those two people have insight of what it takes
Right,
to achieve it, and both speak very eloquently to it, and both are, actively pursuing it.
right.
And here's your non-farm labor productivity. It's kind of bouncing around. It's it's hard to see. It's hard to get excited about a 2% productivity output per hour year-over-year percentage change.
Larry,
It's
I
very
would,
hard.
I thought that was one of the more interesting parts of Cathie's conversation. I think it was Cathie because I've also listened to the All In pod that even with the big productivity increases of the 50s and the 90s, the country has not really had a giant spike in productivity since the teens. The
20s.
or the previous 20s, yes.
Yeah, the
And
1920s.
we
Yeah.
had the telephone, the
Yep.
the internet, the national road system, all this stuff happening simultaneously is what made it happen last time. And once again, this is what Cathie's been saying is we're back to having simultaneous, not just one big productivity, just not just AI is coming, but embodied AI is coming in the form of robots, whether they're four-wheeled
Yeah.
or
I will point to you, 1995 to 2005.
that was a very good, yeah.
I will point that out to you.
Mhm, mhm.
But yeah, and that was the internet, by the way.
Right, right,
But yeah, you're right. I mean, we have the spike in 2010 when we came out of the 2008
right, right,
global financial crisis. We didn't do too badly between 2014 and 2020. Then, of course, we had this crazy
right. Yes,
business with the pandemic.
yes.
But now we're back at 2%. We definitely need to lift that up, and that's going to be critical. So, there it is. I mean, that's the stark reality. We have to lift productivity, and we have to reduce our costs, our federal the federal share of the pie.
Right, exactly.
So, and I think that it boils down to education. We've got to get all the administrators out of education.
Yes.
Seriously,
Oh, I,
all
I know.
all the administrators out of the hospitals.
Yes.
That's a very serious
Oh,
number.
yeah.
We've got to get a lot of the administrators out of government
Yeah.
and subcontract and contractors, as you point out. Uh, that's the and we got to get all the people who administering regulations out of their business. And therein lies the improvement to 3%
Mhm,
and the reduction in the budget.
mhm, mhm.
It's going to be a fight because a lot of these people are well ensconced in their jobs, right? Here's a great slide. Look at the U.S. crude oil field production.
Crazy.
Yeah. And the amazing thing is there's so much more to go.
Yeah.
This is being stifled right now.
Yeah,
It has
I think Cathie even misspoke. She said that Saudi Arabia had the largest reserves. I think the United States has the largest reserves.
I
Um,
don't know that that's
but
true. I don't know. I don't know the number. It's
yeah,
up to, maybe
I,
you do know the number.
I don't have the numbers, but I believe that it's the United States. But anyway, in the capability, the untapped capability in the United States is obviously massive.
Yeah.
And so going up by 3 million barrels a day is not a giant step.
No, it wouldn't be a giant step. And a lot of it could come from Alaska.
Right.
So a lot of it will come from shale, but a lot comes from Alaska. So here we have our old friend, the money supply and CPI inflation. And I don't think there's a big change right now, right? I mean,
Only thing that Cathie mentioned was that we were making progress, and then all of a sudden, we had a month,
Spike.
a month of not making, or a month or two of not making progress.
Yeah.
She anticipates that this, and I think we would all agree that the interest rates are going to be coming down. And so the money supply is going to be impacted.
Yeah. Yeah. Well, time will tell.
Yeah.
I will say that my own feeling is that we're coming out of the recession. Just the level of confidence I see people, having right now, I think I sense that we are going to come out of this recession. I think we're going to have a post-election boom.
Yeah, I think it needs to be led by an improvement in manufacturing.
Yeah.
And the improvement in manufacturing is probably going to come, from auto, housing, and durables. And if we can even get two out of those three, because I'm not sure housing is going to give us that boost really quickly, but if we can get durables, and so there was some evidence in the Michigan sentiment numbers, the consumer sentiment about buying durables, but right now that sentiment was they needed to buy a new refrigerator because they were afraid the price was going to go up.
That's funny, isn't it? Yeah. But it just shows you the dynamics of pricing in the
Yes, yes,
marketplace. Yeah.
exactly.
Yeah. And then Cathie's favorite, the metals to gold ratio versus the US 10-year Treasury yield. It's still way apart. I think the metals to gold ratio is going to normalize when gold falls relative to the market.
And I can't
With
figure out how gold's going to fall, Larry. What's going to be the factor? It comes back to my old,
confidence in the dollar,
okay,
the US recovery.
okay. Yeah, I see consumers, in particular in China, South Korea, and United States, buying gold in massive amounts.
It's when
Central banks too, but
central banks buy so much more than the retail that I don't think the retail really moves the needle. I think it's when central banks buy, and I think the return of American ascendancy economically is going to lead
Hmm,
to a drop in the price of gold and improvement in the dollar.
okay, okay.
Yeah, I think the US numbers are going to look really good within a couple of months now.
Mhm, mhm.
And there's so much confidence around, people are going to spend money. I I think that it's going to be a gold returning to its older levels, not all the way down, but certainly returning quite a bit. That's my guess.
Okay, all right.
So I think the metals to gold ratio is going to improve.
And interest rates, of course, will come down.
Exactly.
And so that'll bring it closer to this number. I mean, there's no way the treasuries are going to continue at, 4.2% if the Fed has dropped and if the interest and if inflation is dropping. So I can't, I really think inflation will drop. Um, because I think that even though the price of labor is continuing to go up a little faster than I'd like to see it, I think that what do you call it, the AI is going to come in and start cutting in a little bit to those service jobs, and
Yeah.
that's gonna help that one.
There are quite a few forces that are acting in the right way. Yeah. Yeah. So, yeah, we're singing a whole different tune to what we were singing a month or two ago
Right.
before the election.
That's right.
Well, here's this crazy yield story.
Yep.
I mean, crazy, right? Who expected it?
Yeah. 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 So you would think it goes back to normal. As Brad Ferguson likes to say, it always returns. No, I'm sorry, that's Nicholas Gibbs likes his favorite saying is that it always returns to the norm. So we should see it coming back down to that something close to that norm.
Yeah, well, that trend line is trending to zero, and it's not going to ever get back to zero, but it could certainly normalize at 2.5%, right?
Right.
Right. As long as inflation does. Well, here's your University of Michigan,
Yep.
and I think it's both up a little bit, you know,
Yeah.
University of Michigan, yeah.
Right. And so you can see on Friday, you saw this improvement. And I think both of them came out last week. And so both of them are showing improvement, pretty good improvement. More, the University of Michigan's was more about current conditions as opposed to future conditions. So people were very excited about this, like, the next couple of weeks, next couple of months, but further out, there's still a little bit questioning. Mostly again, because I think they've been hammered about this tariff thing, which I don't think is going to be nearly as scary as people think it's going to be for a whole host of reasons, which I could go on and on for hours about.
Right, and I agree with that, and because that was our experience with the last Trump round. I mean, I wrote a piece, I posted a very short post about, the Trump does not use tariffs to raise income. Trump uses tariffs to impose policy.
Right.
So it is really a negotiating tactic, not a economic tactic.
Right.
Not an economic policy. So this is non-US net income, non-corporate divided by corporate.
Yeah.
So, this is the worst non-corporate corporate net income ratio we've seen for years. I mean, when the line goes down, small companies are hurting.
Yeah.
Because you're showing corporations doing better than small business.
Right.
And you're always on about small business. This is the indicator that you're right, that small businesses are hurting so badly.
The NFIB. Go ahead.
We have to see this go up. It's very important.
So the NFIB report comes out this Tuesday. I'm going to be very interested to see whether there's more optimism after the election or not. But the small business sector, they have definitely, again, a lot of that, if you start taking it apart a little bit, a lot of small business people are in housing. They're home contractors. A lot of them are in durables. So these are the categories that have been hurt so much. So I think it'll be interesting to see if NFIB is showing at least some improvement in optimism on Tuesday.
Indeed. Well, let's see if you all are right. Excuse me.
Sure.
S&P 500 price to gold ratio. So, I'm of the belief that we're going to see a significant improvement in the price of gold, or a reduction in the price of gold. So we're going to see the ratio go up. I'm not sure what Cathie said about this. Can you recall?
I don't remember either, except that it's flat. So what she was pointing out is that it's flat at this point. And I don't remember why that concerned her. Well, okay, so 𝐒𝐚𝐿𝐵𝐶𝐝, one of my favorite guys for finding information, even if I'm not always in agreement with his analysis, 𝐒𝐚𝐿𝐵𝐶𝐝 is all about this, talking about the S&P is out past its skis, out past its skis. Gold is also out past the skis. Then you've got, in addition to that, you've got the NASDAQ and the Dow are at record highs every day. And then you've got the Bitcoin that's out at record highs. So all these things are at records. How come none of them are in contraction? None of them are, where's all the money coming from? And then you and I have talked about
money's coming from money. There's a huge
money.
amount of money on the sidelines.
Right, exactly.
And it's been on the sidelines for quite a long time.
Right.
But if you look at the gold S&P 500 price to gold ratio, it it's kind of at a happy level, a relatively happy level. Am I wrong?
Well, happy at the high though, at the high.
Yeah, maybe at the high. Yeah, not as high as,
The one
2000.
2000, yeah, not the bubble. That was an actual bubble. So I don't see this as a bubble, but I do see it as. So I just did a thing on it the other day. Again, I reiterated my statement. I think we need a 10 to 20% pullback, but at this point, a 10 to 20% pullback, everybody just go, oh well, no big deal. Okay, off to the next leg.
Yeah, this is interesting. Bitcoin to gold.
Yeah, yeah,
Bitcoin is becoming the reserve currency of the world, store of value. It's a new asset class.
yes. Don't tell that to CERN Basher.
Yeah. Well, I mean, and then you get the crazies as well. I mean, what about this guy who's issuing all kinds of bonds
Yes,
on the
yes.
basis of Bitcoin? I mean, MicroStrategy.
MicroStrategies.
I would call it dumb strategy. I think this is going to be one of the biggest busts of all time.
The MicroStrategy one.
Yeah, I think it's going to be one of the biggest busts of all time
Interesting. Yeah.
because I think he's levering so much, so fast, and 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 in so dangerous a way that at a point in time, Bitcoin can go back by 50%. It can
Right.
it can be back at the 50,000 mark
Tomorrow.
tomorrow.
Right.
And I think that he finds himself, with the tide out and his pants down.
I
So
like
you
that.
heard it here first.
You heard it from you.
It's going to be, another one of those Enron situations.
Yeah, right.
And he wants Microsoft to take their cash
Yes,
and
yes.
put it into Bitcoin. Now, I think Elon put $1.5 billion, I think it was, into Bitcoin, and then got cold feet when the Bitcoin went down, or his CFO got cold feet, and they sold a fairly significant amount of it. It's
Right.
actually worth now well over $1 billion again.
Yes, and it has $1 billion profit at this point.
I mean, yeah, yeah.
Unrealized.
Yeah, it's almost all profit. So, I thought they had to recognize that according to the.
Uh, the suggestion is that they will probably be recognizing it in the fourth quarter. Yeah.
Yeah. Anyway, so I think that, I don't think the pullback is going to be 50%, but I think there will be a pullback in due course, particularly if Trump is successful. Ironic.
Okay.
So I think this is the end of the lesson. I think,
Okay.
I mean, Cathie's very high on Bitcoin. She thinks it's going to be the reserve currency of the world. It's going to be new asset class, a store of value. It's going to be 2 to 6% of every portfolio.
Right.
It's going to be a financial services tool of immense value. And all of that's true, but it's still going to be fluctuating in price dramatically.
Now, I guess at some point, if it reaches, if the United States government, I mean, this is 5, 10 years from now, if the U.S. government was truly using it as as much of or more than a reserve than gold is, it might be a point at which it becomes stable.
It's possible. Look,
I'm still studying it, Larry. I'm still studying it. I've only read the first 3 chapters. I've got so far to go.
yeah, I mean, I think nobody knows. Nobody can tell if it does become a world reserve currency, the world's reserve currency, and if it does, how it affects the United States.
Yeah, yeah.
But my own feeling is that we're going to see 50,000 in dollars of Bitcoin per Bitcoin sooner than we're going to see 150,000.
Okay. All right. Okay. So it's kind of like my theory about the S&P, that we're going to have a 10 to 20% drop, but we're going to go up after that.
Yeah, and so even though I see Bitcoin declining, I still see a case for accumulating Bitcoin over time
Mhm.
for a portfolio.
Mhm. Mhm. Okay.
And I've got a very small amount, but I'm not accumulating, and I think probably I should be accumulating on a dollar cost average
Yeah.
basis over time.
Yeah. Well, you don't have as small amount as I do. I have $10, which was
I've got a little bit more than that.
which was given to me by a fan. All right.
Yeah.
So Cathie, I think to summarize, Cathie, like everybody else, is extremely bullish right now. She's extremely optimistic about the coming few quarters. To echo you, Larry, I believe, I don't know if we're out of the recession yet. In fact, I think we might actually be kind of a little trough right now that we're going to find out about later. But this trough is a really minor trough, in my opinion. I think we will be by end of the first quarter, we're going to be flying. So whether that's March, whether that's April, the optimism, because optimism all by itself does a ton to an economy.
Yeah.
Just just having people willing to go out and spend a buck because they think they can pay it back, it matters.
But you know, we're probably at the peak of Trump optimism right now because the reality, the rubber hasn't hit the road, the reality hasn't set in. Congress hasn't started messing with, bending reality. So I'm not sure that this is not the honeymoon period and it's all going to go to
No, but
hell.
but you know, Larry, is when you were running a business, well, you're still running businesses, but you're making decisions today that are not going to have any impact until April, May, June. So
That's true.
the optimism that we're hearing from consumers as well as from business right
That's true.
now is
Hmm.
causing them to go make decisions about buying equipment, about putting in new automation, about hiring, about planning. I mean, all that's already in process. And it's not going to be a matter of they're going to change their mind in March. They're going to they're going to be executing in March, and all of that is going to be flowing through the economy. At least that's my crazy opinion.
And you're sticking to it.
That's sticking to it. Larry, thank you so much as always for coming on and helping me go through the Cathie Wood discussion because some people would rather hear it from you and me than from her. But for those of you who now are intrigued and want to hear what Cathie really said, we always encourage you to go back and also listen to Cathie's specifically. And I echo Larry 100%. If you want to really dig in and start getting even deeper, besides listening to all of my videos and listening to all of Larry's videos, then you've got an opportunity to go listen to the All In podcast and the uh,
BG2.
BG2, BG2 pod, the BG2 pod. Yes.
Yeah. Yeah.
Heavily recommend all of the above.
And I also recommend listening to the original Cathie Wood presentation because I think, if we've whet your appetite, that's the way to satiate it.
That's right. All right, Larry. Thanks again. And to all of you out there, it has been great talking to you.